The budget is out. There is praise and there's criticism. Praise because the budget gives a very, very huge impetus to growth. Criticism probably because the salaried class is not very happy. They didn't get the tax relief that they were expecting. Welcome to ThePrint. I am Shubham, Batra, Senior Associate Editor at ThePrint, and with me today is the man who's at the heart of budget making, Economic Affairs Secretary, Mr. Ajay Seth. Welcome, sir.
Thank you. And just to clarify that I am not at the heart of the budget making, the entire finance ministry.
Entire finance ministry. I agree, sir. I agree. Sir, I want to begin this conversation by asking you on some metrics, sir. So what is the real GDP estimate that the government has assumed for FY23?
See, what the economic survey estimates about 8.5%, and we share that optimism.
Okay.
But when we did physical arithmetic numbers, we felt that we have to be a bit conservative. And we have being conservative on the side of GDP is a good thing to have, because we have to keep the overall fiscal consolidation path, which Honorable Finance Minister had promised last year, and we are well on track. So the 6.4 is a very sacrosanct number, and we would like to adhere to that. We would not like to overestimate it. Having said that, the difference between real to nominal, because what the budget numbers assume is a nominal GDP. The difference being the deflator,
Agreed.
Which is largely goes by on the more or less on the lines of the WPI.
Okay.
I expect that in 22-23, WPI numbers should be much more moderate than what they have been this year, for two reasons. One is the high base. This year, last 12 months, WPI numbers have been fairly elevated. The second one, that monitoring conditions in policy rates in advanced economies getting tightened up.
Agreed. Yeah.
Then the global commodity prices should ease up. And once they moderate the global commodity prices, that should also get reflected in the WPI for us, because fair amount of that is imported in commodity prices.
So can we assume that the number should be somewhere around 7%, 7 to 7.5%, if we have to put a number on the real GDP estimates for FY23?
I'll put it closer to about 7.5, not 7. So we see that whatever numbers we have assumed within an upside potential, like when we have said 11.1%, we see an upside potential there rather than a downside potential being.
Okay. So the budget has given a very, as I said earlier, it's given a very strong impetus to growth. There's a huge outlay for capital expenditure. What are some of the execution challenges that you see with CAPEX? Because even this year we had a record CAPEX target of 5.5 lakh crore rupees. You've scaled it up to 6 lakh crore rupees. What are some of the execution challenges that we've seen and generally is seen throughout the year?
Okay. First of all, the capacity of the government system to utilize allocation of that extent has increased or has improved very significantly. Keeping that in mind, just about 2 years back, 1920, the spend was 3,35,000. From there, it is becoming 2.2 times, which is a huge increase. So capacity have increased. Currently at 21-22, the first quarter, in terms of the capital utilization, capital spend, was a tough time because the first quarter, because of the pandemic, second wave which happened there.
Agreed, sir.
I don't see in the short term of 22-23 being a major challenge, and keeping that in mind, that out of the absolute increase of 2 lakh crores, 1 lakh crore virtually is going to the state. It was 10,000 becoming lakh rupees. And states have a tremendous capacity and good set of projects to invest in, which will give a growth impetus for there. So this time, the heavy lifting, the financing is coming from the central government, but in terms of the spending part, fair amount of the state government is also being enabled to take that part. But moving forward, because it's not just saying that this year, spend of that nature and doing it more and more for tougher projects, to build it over a medium term, this budget also announced building capacity of in terms of planning, designing, financing, implementation and monitoring. So we had started some work, but now we have reached a situation wherein we are in a position now to roll out our capacity building efforts.
So you are confident that you'll be able to meet the capex target.
Sure.
So I want to shift the focus just to about the jobs. Which are the specific measures in the budget that you see will give a push to jobs, particularly in the short term? Because capex implementation takes a long time to get to that level where we see actual jobs coming up. In the short term, or let's say for FY23 particularly, which is that one measure you think that can really push employment in the economy?
Okay. We have talked about the infrastructure, but I'd like to mention that this is not a one-off event. This is a continuum we have to see.
Yeah, it's been
that the seeds which were sown last year with the increase of 34%.
Agreed.
Also fructifies. It's a continuous effort with a much scaled up effort. But look at another sector, the MSMEs, that they are not totally out of woods in the sense that those which are already ongoing industries which are there, they required, our sense was they required support for another year. And Honorable President in his address to the Parliament mentioned about a study findings which talks about 13.5 lakh MSMEs which have gone under the water but got saved because of this scheme. And there's an independent study. And that led to saving of 1.5 crore jobs, which is not a small number. In the presidential address, these numbers are there. Further, apart from continuing for another year, hospitality and related sectors, enterprises, they require support. And they have not reached a pre-pandemic level. So this again creates an avenue for about 50,000 crore of focused support from them to be provided there. Third element which is there is the new MSEs, micro and small enterprises, through the trust scheme, which provides the guarantee. We do hope that this year additional credit can also flow to them. That means expansion, meaning the new units being set up, and that creating the jobs which are there. So we see a fair amount of work apart from the infra spend to come in. And on this infra spend, we should not look at it this manner that it is a lag, jobs will come with a lag. Infra spend requires more steel, more cement, more construction equipment and so on. And those requires to be produced right away rather than with a lag that increase to a more demand, so meaning that more employment, that means more transportation and so on.
No, I agree. I was thinking about the gestation period from when the projects kick off, and that's where the demand sort of starts coming in from different sectors, whether it's steel, cement, the entire construction sector picks up, and therefore jobs will come in thereafter.
For this spend, we have projects on hand which are already grounded or about to be grounded, and which the work can start right away. So that we don't see in the 22-23 that to be a constraining factor.
Okay. So just to go back to growth a bit, there is this particular thing that ma'am had said, finance minister had said, that right now the public spend needs to support the private sector for them to crowd in. Now that is one side of it. The other side of the equation is it's a very high and a record borrowing program. And as a tenet of economics, they say that if the government borrows so high, it sort of crowd out private investment. So it feels like there's a conundrum here. For the benefit of our viewers, if you could just explain on what is the thought process here.
See, that each thing has a pros and cons which are there, but we have to see it in the right perspective what we are talking about. On the one hand, banks have a much stronger balance sheet. Corporates have a much stronger balance sheet today than say about 6-7 years back what they were having. Banks credit, non-food credit is about 6-7% what the growth is. That means they have the money, they have the liquidity. They are looking for, is not short of funds that good projects and they intend to invest which are there. So it's not a constraining aspect into the economy which take place. The second one, when we look at a high volume of borrowing, we have to see it in terms of relative to GDP. So we can't be comparing borrowing of say last year with the next year, because the economy size has grown up.
True.
Current year 232 lakh crore, next year 258
lakh
plus
crore.
an upside potential. So it has to be seen in that context that in a normal year after year, if the government borrowings were to increase relative to GDP, it would have been a problem. Crowding out would take place when the private sector is also operating or rather investing as per its potential, kind of a thing. But here we have a situation where it has a much higher potential. Needs of the economy are more, there are enough liquidity into the market. So at this point of time, it requires a pump priming. Just look at this manner, that which is the obvious term in economics which is used. But obviously, if in a medium to long term, if government were to borrow at this elevated level, there would be a problem. But at this point of time, it requires, and that is how a glide path has been given. We went up to 9.2, from 9.2 come to 4.5 in 4 years period. So that's what the glide path has been given.
And you and how confident you are to achieve that glide path?
Certainly, this is as they say, the walk the talk. And so whatever is promised, that is being delivered. And we are perfectly on that path itself.
You know, you spoke about liquidity in the market, and again, I'm just going to link it with the higher borrowing, that the higher borrowing this year comes also on the backdrop of global monetary tightening. Accordingly, the Reserve Bank of India is also going to respond this year. There will be some amount of liquidity that's going to be drained from the system, or maybe there's a rate action that RBI undertakes. Now, with this condition, how confident you are that the borrowing program will go through?
See, we are in regular conversation with RBI, and between RBI and the government here, we are fairly confident that the borrowing program will be smooth and without any disruption to the market.
There's an assurance from the Reserve Bank of India there.
Is a mutual confidence which we have.
All right, I'm just going to shift a bit to disinvestment or privatization. Now, purely going by the pipeline of companies, sir, that was announced last year for privatization, just BPCL itself can meet 80% of the target that you set for the for FY23. I mean, some would say that the targets are conservative. I think they're unrealistic, sir. You can obviously get a lot more. So, and what has happened, the narrative, therefore, that's built is that government was so aggressive last year with privatization. Why are they going slow this year?
It's not a question of going slow, like what has been already done this year. Air India, which has not led to much of inflow, except for about 2,700 crore or so, has been a hugely complex.
I agree.
And it has taken quite a bit of our imagination, thought process, and of course, that all starts being in the right place kind of a thing.
Agreed.
Thereafter, NIANL, it will not lead to inflow of a single rupee into the government consolidated fund.
Agreed.
It will go to somebody else.
The 5 companies that
by the
actually
companies, it will go in there. But that is in line with government commitment on the new PSE policy which are there. So some of these disinvestment, rather finding a strategic partner, does take a lot of effort.
I agree.
Is again a heavy lifting. And each company, what we have realized that it is not a template, that one template fits all, doesn't work it here. For each company, it has to be tailor-made in terms of the shareholders agreement, the risk element are there. Because one lesson which we have got is that risk around a company are specific to that, or at least specific to the sector. And if we are not in a position to address that, we will not get good bids. So we may not get any bidder at all. So that has to be kept in mind. And obviously, for example, what has been announced that LIC is expected shortly, obviously, though the size of the issue has not been decided as yet, but yes, there should be a far larger inflow should happen on that account. A similar manner for BPCL also. Again, that attempt being that we do an overestimation, then not meeting it, and then the fiscal math going that we do not want that to happen, because 6.4 is what we had to deliver. The 6.8 to 6.9, I don't take it as any significant slippage. And considering that Air India obligation are also taken care of.
Maybe that's why.
That has been delivered in spite of very major commitments which came because of the pandemic. So even the 22-23, you want to be at 6.4 and with upside potential happening.
No, I agree. No, before I move on to something else, there are two questions on privatization, and I'll keep them very small. Firstly, you spoke about you're talking to different companies, obviously at the same time. The Department of Disinvestment, when you run the process of strategic disinvestment, from where it starts to where it ends, what is the time usually that it takes from when you start talking, the company starts finding strategic buyers, maybe in BPCL's case? I'm only trying to get at the point that if the department is working, and I know how hard the department is working, whether they will be able to sell or privatize the companies that were in pipeline within FY23. So just to understand the time frame it usually takes from where you start to where you end.
If you look at it, that what it takes in terms of from initial EOI stage to completion, it requires about 12 months time.
Okay.
And but each specific company, I'm saying just a broad number and broad estimate what our experience has been. But each company, there are peculiarities around that there may be some subsidiary. Do we want to disinvest, not want to disinvest? If not, then how do we take out from there, etc. So many things are there. Then there may be some land assets may be there. If they are integral to the business, obviously it will go with them. But if it is not integral to the business, then government stance has been that take that out, and then as a running concern, rest of the unit is given. So that does take time rather than the mere process of doing the UI process and then calling the bids, etc.
And therefore it could be rolled over if the process doesn't work.
So whatever is there, and DIPAM, as my understanding, is working on a number of companies which are there. At times it works parallelly.
Agreed, that's why.
Is also a question of, it's not just the DIPAM driven, and that is also what I had to clarify. It is DIPAM and the concerned admin ministry. They work in a very close coordination to deliver them. And of course, from finance ministry, we also provide input. There's through a committee of secretaries, etc. when we meet and provide our inputs into that process. But it takes two, DIPAM and the admin ministry, to run together so as to deliver that baton.
The government departments have to work together, of course. The second question on disinvestment was how much of the LIC, I know it's going to be a rough estimate, but how much of that is factored in this year, sir, from the LIC IPO?
See, LIC IPO, as I said, that budget making, we have to do several estimates which are there. And for certain things, we have a very clear visibility. Some of them, the visibility is not so clear. And so very intense discussion at times doesn't become possible. And we are hopeful that DIPAM Secretary is confident it will happen this year. And we have not reached, that's my understanding, is not reached to a situation where we can, this is going to be the issue size and this is going to be the likely amount. So we do not want to.
But your discussions when you were coming up with the 78,000 crore number for the revised estimates, you would have had discussions on how much should be pegged for LIC in FY22 and then how much in FY23 if it has to be spread.
This doesn't get something in this year and something in this the next year.
If it has to come, it'll come either this year or next year.
Goes the next year. That's how it will happen, because the public issue is which is happening.
Okay, so I just want to now shift the focus to understanding how much has the government budgeted from the RBI surplus in FY23 and what are the assumptions that are underlying this surplus?
I leave that to a number between RBI and the government.
Okay, because I know the number itself between for the banks and RBI is some 73,900 crore, but because in a truncated year last year when the RBI changed their financial year, the government had got such record surplus, so the market is actually wondering on why the number is less this time. That's why I thought probably it's good if I ask you this question.
See, the numbers which you see in the
budget,
in the document which are there, is whatever classification goes into the public domain is as it is, as was current year, this has gone into the next year. Now, non-tax revenue, there are several sources are there, some go down, some go up, kind of a thing. So the overall number which is presented.
Indicative.
There's indicative. No, there's no indicative number. It's not a single line item where it is shown. And as far as individual sources are concerned, that doesn't go into the public domain. So I leave it a matter between RBI and the government.
So there's a huge plan for asset monetization, but when you open the budget document, I mean, I tried to search for it and I may have missed, but just for the benefit of our viewers, have we factored in any, or have we budgeted any amount to come from asset monetization this year?
See, the asset monetization per se, most of the cases, except if you were to be a land owned by the government, non-core asset, if that were to happen, and asset monetization, that money is not supposed to come back to the consolidated fund. If a PSU, most of the assets which are there, like NHAI, if NHAI were to do a INVIT or do a TOT project, whatever the money they get, they will invest into the next project.
Okay.
So that money doesn't flow, it finances further capital investment, but to that extent, it reduces the demand on the consolidated fund, but does not come into the consolidated fund per se.
So one of the ways to finance the fiscal deficit last year was seen in listing the government bonds on global bond indices. I know this question's been asked again and again, and Revenue Secretary had also clarified about the BEPS discussions, and when they conclude, things will move forward. There's some taxation issue, but are we confident that in FY23 we're going to see this happen finally, because it can really support the borrowing program that the market is worried about? Or
Revenue Secretary has already replied to that question. So why you are seeking clarification from?
No clarification, but just to understand, because I understand processes, these kind of announcements take time. There are discussions back and forth with the index and the government or the Reserve Bank of India, but because a lot of work has been done on this.
See, when the discussion started with the indices, that then the tax exemption being required was not a ask or was not an expectation. It came much later on. So now that new ask has come in, and that has got implication not just for a specific case, but overall the taxation approach of the government. So any change in that approach has to be decided with appropriate care. So it's a new ask.
Yeah.
Not at the beginning when this conversation started, it was expected that this is required.
So the very last question that I'm going to ask you is about the revenue estimates and therefore the borrowing estimates. Many channels and already a lot of discussion has happened that yes, you've been very conservative with your revenue estimates. I mean, if you look the money that's flown in Jan-March quarter itself, I mean, it will be, there are projections that it's actually going to be more than what you have pegged in the revised estimates. And on top of that, this year, whatever growth we see. Now, the argument here is that why not show those kind of, I mean, instead of being conservative, why don't we show an optimistic figure that yes, we will get this much, because it reduces the pressure on the borrowing and therefore on the market. I mean, the yields went up drastically yesterday, so it could have gone out as a good signal to the market also. As it is, the environment is now of tightening rather than loosening. So in all of this, what is the message that you'd send to the bond market or to the market, even the equity markets for that matter?
See, revenue receipts have grown very significantly this year, and when those were estimated, and these were estimated in February of 21, and they were expectation of a normal year, and though they were still, second wave came in, but rest of the assumptions came out good. And that's how the good growth has been seen. And this year, we are expected to end the year somewhere about 10.8% of the GDP, tax revenues, which is one of the high in the recent years in terms of the proportion which is there. Now, in the event of there being any upside gain over there, where does this money go? This money will come and remain as a cash balance. Not that just overnight it can be spent. That's not really the intention is.
Agreed.
And to that extent, it will help for the next year financing program. Just to let you know that this budget also assumes close to about 170,000 crore of drawdown of the cash balance.
Yeah, that
in
I
the beginning
so.
it was about 70,000 and now it is 170,000. And to that extent, borrowings have been reduced. RE number, if you look at that particular one. So this is a dynamic number. It's not just decided once and then implemented with eyes and ears closed. No, it requires almost a fortnightly basis.
Agreed. It's evolving. The situation is always evolving.
Situation which are there. Similar manner, when we find that we have made an estimate for the small savings. Now, if the small savings were to follow the pattern which was seen this year, our need for market borrowings will be lower.
Agreed.
This year we are supposed to be close to about 6 lakh crore, 5 lakh.
Over 5 lakh crore is the number.
And closer to 6 lakh. And whereas next year we have assumed 4.25.
Agreed.
That estimation is based on a premise that investors would find newer, more attractive avenues next year rather than depending upon the government small savings to invest money. And I would like to also, that is also public knowledge and etc., that small savings really doesn't mean small in the traditional sense. There are several fair chunk comes in from big investors as well, where say in the tens of lakhs also a single person would have invested. So those people may find other avenues. So that was really an idea of 4 lakh and 4.25, and that's how the numbers are. So I look at the macro number, what is the fiscal deficit, what is the net figure, rather than looking at from where it is coming. Because this is more of a estimate that point of time to be adjusted as we go along.
So would it be fair to say that the number could actually be lower than what it is projected?
Certainly.
Because the switch operations that were taken place on Monday itself, which don't seem to be factored into the gross borrowing number.
That has not been done because of the limitation, in the sense that this work which goes on, the printing and then the numbers which are going to the various documents, it becomes extremely difficult to make a last minute change. At the same time, the operations which happen, they can't be held back just because certain numbers have been assumed somewhere in some other documentation.
So we can now say that yes, the switches will be factored in later, and also if the flow in small savings is even better than what is projected, then probably the money can come from there itself and the market can get some relief there. So that's all the questions we had today. Thank you so much for taking time for this interaction, and many congratulations on the budget, sir.
Okay, thank you, Shubham.
Thank you,
It's a pleasure
sir.
talking to you. Thank you.